Starting with the UK, because that's obviously my home patch, there is definitely a shift in the current environment. So I'm really talking about the first half of this year. The lending activity has noticeably dropped off. I think it's probably fair to say that alternative debt providers, or debt funds in other words, have picked up on quite a significant number of development-led opportunities. If you look more across Europe, which is not characterised by the prevailing conditions in the UK of uncertainty, so there is a definite trend that more of the alternative providers are looking up the risk curve at development-led opportunities. That doesn't mean to say they take every single one, because I think there is quite a cautious stance being adopted. And overlaid by that is the ability for a non-banking institution in any particular jurisdiction across continental Europe to be able to access security on the assets in a form that's adequate to protect its position. So if you look, for example, in Italy, enforcement, they may take a lifetime. If you look in France, if you want to be a lender, it's very difficult without being a licensed institution. Yes, there are ways around it, but they're complex. And I think those two examples alone reflect the difficulty of non-banking providers of finance to access the market, whether it be for straightforward investment funding or indeed for development funding. So with that sort of background to the environment, it's probably fair to say that there is a trend towards taking development risk on board. But is it a strong trend? In other words, if you took it from a statistical perspective, is it a strong correlation, 0.7, 0.8 if you like? Hard to tell at this stage, because I think it's very, very early in the expansion of the alternative debt funds into the wider lending arena. Bearing in mind they did originally start in Europe, in the UK, so they've drifted out or chosen to go overseas into continental Europe. I think it's hard to tell at this stage whether they are polarising their position into any particular part of that risk curve.
If we can go back to Germany, I think we have a situation here that core is going to be financed. But if we're going to take a look at really everything else, who is the end investor, regardless of the structure, right? Because the alternative investor from the UK or US, he's not going to get its yield right now in Germany. So I was just curious here from the legal side, and also Daniel from your so from the accounting side, who do you see is his family offices? Who is actually really active in his market, if there is really this business right now? Maybe Stephan or
and maybe coming back to developments on the German market, I don't see a significant boom in developments, but it, as always with real estate, it very much depends on the city. It very much depends on the asset class. I'm sure there's a lot of residential developments that are easier to do nowadays than they were in the past years, because a lot of cities have realized that they need to give permits to build, and so you'll find developers who will take that opportunity, and you find, let's say, mixed lenders. It's still difficult, in my opinion, to for any type of speculative investment finance to find a bank who's going to accompany you, unless it's building a 20 apartment building in a nice part of Munich. You're surely going to find a bank who's going to finance that. If it's large commercial things, I would still think that a lot of things, speculative investment of an office tower in Frankfurt, you'll have a hard time finding a German bank taking a big part of the development finance, but maybe a small part of it. And as everybody globally is on the search for yield in some respect, I'm sure there's going to be a trend that banks who are getting more and more pressure with senior loan margins to also open up to these things where a larger margin is possible, and whether that's a risk adequate margin, the future will tell. But I think in general, if you have a good idea for a project development in Germany, you'll find financing, but not the chunk of financing from regular banks.
Great, good. And Stephan, do you want to pick up that point?
Maybe try. I'm a banking lawyer. I like definitions. Maybe let's say try to give you a definition. What do we see? Let's say, as Daniel said, I mean, speculative development is quite a tough cookie, and it's a good sign because it shows that the analytics are right, that risk awareness is right. What do we see? Let's call it repositioning plus. We see projects which have, let's say, a core of a cash flow, a core of a tenant, a core of a substance to build some finance on. And they have opportunity was either the building permit and building law is right, or someone managed to buy together, say, plots in a way that they have not existed like that before. So you have a core where you can convince someone it is safe to go and provide debt finance for it, to give it a start, and you have a sound business plan, well, to upgrade, improve, or expand that property. So I would call it repositioning plus. This is what we see, and this probably is the good blend for, let's say, the higher, let's say, need to go and, let's say, go into more risky space for an adequate, let's say, margin.